investigation going on, civil investigation, and you have all of these regulators, and not just the FAA, but regulators from around the globe involved. Does it make sense to you to see these, I guess, sort of delayed drips and drabs of information here?
Well, look, I think it's an imperative that Boeing be transparent with the regulators, with congressional oversight committees. I think let's wait till the facts come out as to why this particular set of emails came out when they did. I'm not sure we know enough yet to draw conclusions. I think, you know, the commitment at the top of Boeing is to be transparent and it is to be forthcoming. And I think, you know, in these kind of circumstances, you don't always get the full version of the facts when things break. And I think we should be a little patient and just allow the regulators and the like to, you know, interview this pilot, to find, or the check pilot, find out why the emails came out when they did, and take those facts once they know them into account in their decision-making process.
Doug, let's try to spin it ahead to after return to service actually happen, whenever that is. How much harder did it just get to convince consumers this plane will be safe to fly? And how would you try to market it once it got back into rotation?
Well, I think when the MAX returns, I think one thing that consumers can take comfort in is that it probably will be the most heavily inspected, you know, airline, you know, ever. And I think, you know, there'll have been no stone unturned left by the FAA, and I think that consumers can take comfort in that. I think we should also just not lose sight of the perspective that, you know, overall aviation today remains the safest form of transportation. The two instances where there were crashes with the MAX, I think, were unique. I think they, you know, as we've gotten more into the details, they involved pilots and crew that clearly had, you know, less experience than, say, what a U.S. airline would clearly have. And I think consumers can take comfort in that. You know, I leave it to Boeing as to how best to market the airplane going forward. I think it'll have, you know, an airline customer base that will want to take delivery of the airplane. Demand continues to be robust. This disruption has, you know, had a negative impact in terms of the amount of capacity that can be offered to meet that demand. And I think once the airplane gets cleared, and it will, I think it's just a matter of time, airlines will clearly want to then, you know, receive the deliveries that they have ordered and that have been holding them back in terms of the capacity that they can offer to meet the demand that's outstanding.
Even beyond Boeing and the 737 MAX aircraft specifically, do you think that the certification process at the FAA is now going to change?
Well, I think that is a fair, I think there's 2 points here. One, I think it's always appropriate when you have instances like this to re-examine the process and to see if it can be improved, see if it can be made better. I think part of the challenge will be, were there to be changes made and were there to be more authority placed in the FAA, it will then need to be in a position where it can significantly increase, you know, its staffing levels and be in a position to hire, you know, world-class aeronautical engineers. And I think part of the arrangement today is a reflection of the challenges that the FAA faces in that regard. I think
Doug, there's so many.
I'm sorry.
Oh, go ahead. Go ahead.
I was just going to say, I think a second issue is, you know, historically the rest of the world has looked to the FAA's certification of a Boeing airplane as basically being sufficient for that organization then to accept that certification. And I think it would be unfortunate if we had sort of a balkanization of the certification process where you had, you know, sort of many voices involved that perhaps could be discordant and have different opinions, and how you create a single aircraft in that process, I think, is something that both Boeing and Airbus are concerned about. You know, developing a new airplane, which I think is in everybody's interest, is hard enough today. It's almost a bet the company type of decision. And I think we don't want to make it so it becomes so difficult that the two large aircraft manufacturers, become more reluctant to invest their capital and take the risks that bringing on brand new technology and a brand new airplane involves.
There's so many ripple effects to this, Doug. I mean, on the supply side, Spirit AeroSystems actually just got a downgrade as well today. It's a major supplier for the 737 MAX. GE, which co-makes the engines, is seeing impact from this. Allegheny Technologies, quite a number of suppliers. And then on the airline side, certainly we've seen the impact to service for some of the passenger airlines as well. As someone who used to run one of these airline companies, how would you be navigating all of the uncertainty around this, the return to service, and also what it means for production and delivery of future aircraft?
Yeah. Well, I think that demand on the passenger side has not abated. And so the impact of the MAX is asymmetrical depending on who has ordered it and who hasn't. And that's just a near-term impact. I think it'll take a while once the MAX is allowed back into service, for the production aircraft to be, to get, service ready and to get back in. However, I would view this as, I think you need to distinguish between short-term impacts and long-term impacts. And to the extent in the short term, stocks are, trading downward, I almost would look at that as an opportunity. Because long term, I think the signs for this industry are very robust. Effectively, you have revenues growing at 1.5 times GDP, and you have two global aircraft manufacturers in essence. And while there may be some dips, I think over the long term, those two companies and the entities that supply them, I think are in good shape, and I would view this almost as a buying opportunity that you would then hold and keep for the long term, just given the dynamic of the business.
Doug Steenland, it's always great to get your thoughts. Thanks for joining us today.
Thank you very much.
When we come back, it is the busiest period of earnings with names like McDonald's, Microsoft, Cat, Amazon, all getting set to report this week. How do you play the big week ahead? We'll talk about that. Later on, 4 drug companies reach a last-minute settlement to avoid the nation's first federal trial over the opioid crisis. We'll get the latest on that when Squawk on the Street returns.
Tulip mania
Tulip prices hit rock bottom.
was the first market crash.
Get out. Go on.
In these uncertain times, you can count on Gamebridge.
Does your broker offer more than just free trades? Fidelity has 0 commissions for online U.S. equity trades and ETFs, plus 0 minimums to open a brokerage account. With value like this, there are 0 reasons to invest anywhere else. Fidelity.
One mistake changed my entire life.
I was on the #1 show in the world.
I distrusted people.
I gambled too much.
Enough with the excuses. How you come back matters. That's going to be your second act.
Back in the Game. Series premiere November 6th. CNBC. Get yours.
Sunday night. It's a rematch of the first Super Bowl. And it may be a preview of the next. Packers.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious?
Snazzy!
Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington?
Easy!
With friendly staff on hand to take any deliveries?
Amazing!
Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living. Reinventing renting.
They don't chant your name when you give blood, or sing songs about you.
But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Stocks are up to start the week as all eyes are on earnings. The S&P nearing some record highs. Investors wonder if this momentum, though, can continue. Incoming ECB President Christine Lagarde gave her thoughts on that. Take a listen.
I was brought up as a citizen of this world. The risk I see is that the United States is at risk of losing leadership. And that would be just a terrible development.
Because?
Because it has been a force for good and for those principles that I respect highly: the rule of law, democracy, free market, and consideration for the individual and respect.
Joining us this morning in Lingen is BMO Capital Markets Head of U.S. Rate Strategy, Mark Wittner, Wells Fargo Senior Economist. Guys, good to see you both. Lagarde's answering some big questions there. I'm not going to ask you about that. But it doesn't sound like you think this short-term rising rate picture can last well into next year.
Yeah, so I think that we're at the moment where there's a reasonable amount of seasonal optimism that's going to be priced in the market. We'll see rates rise. Maybe we get 2%, maybe we get 2.25 10s, but eventually there will be a day of reckoning where we see the realities of the economic situation play out, and the market ultimately in Treasury space ends up being reasonably well bid. We're in a range for Treasury yields, and there's only going lower once we peak.
What are the realities that we're going to face?
So there's a very reasonable assumption that we're going to have a technical recession in 2020. I'm definitely on page with that. Is it as
technical
dramatic?
Meaning 2 straight quarters of negative GDP, or technical?
But only modest.
Okay.
So it's not a 2008, 2009 event. It's something much more subtle. And if we look historically, those are the type of recessions that we typically get.
Mark, are you in that camp? Because the majority of economists are not.
We're not in that camp. We've got the economy continuing to grow, not only in 2020, but into 2021 as well. And there's no doubt there's a slowdown. We have 5 of the next 6 quarters somewhere between 1.5% and 2% GDP growth. But I think folks have looked at the recent environment. We've had this big slowdown in global manufacturing. And some of that is related to trade. Some of it is also that we had too much inventory for an economy that was shifting from 3% growth to 2%. And so I think that part has largely been corrected. And we're likely to see a little bit of a bounce in the next couple of months.
And do you think the 10-year Treasury yield has bottomed, at least for 2019?
For 2019 it has, but not for 2020. So
going back to the point you just made.
Yeah, I think that we're going to see a bit of a sell-off into the end of the year, but ultimately the fact is we are in a world where there is 0, if not negative, term premium, and the Fed is done hiking. They're now cutting, probably go another 25 at the end of the month, and we should see a significant amount of buying interest anytime 10-year yields get above 2%.
Mark, do you think it's a foregone conclusion? The market certainly suggests that it could be that we get this cut at the end of the month. But if we do actually get some sort of trade truce or standstill, if you will, on paper ahead of that, could that change things?
It could, but I think the Fed's pretty much set in their ways that they're going to go ahead and cut another quarter point. I mean, it's certainly better than 50-50, probably closer to 70% that they're going to cut. If we got a trade truce, the benefit to the global economy would not be immediate. So I think that the Fed is still warranted, and if they overdid it a little bit to the downside, that wouldn't be the worst possible outcome, given that inflation's been running so low.
The job market, you make the point it's a lagging indicator.
Yep.
When do we see real erosion? Do you think does it go sub 100? Let's say.
So I am very concerned that the damage that has been done to the sentiment on in terms of manufacturing globally is eventually going to flow through to the labor market, and whether that is this month or next month still remains to be seen. But when it happens very, very quickly.
So you're bracing for a really sort of extreme print to the downside.
Yes, I think there's significant downside risk to NFP in between now and the end of the year.
Mark,
we're not
easy
seeing
to find
that at all.
Opposing calls. Go ahead.
We're not seeing that at all. In fact, We're located in some of the most manufacturing-intensive parts of the country, and there are billboards out by manufacturers looking for workers. Finding workers is still a bigger problem than selling product right now for most manufacturers. So I don't think we're going to see. We have seen manufacturing employment slow, but we haven't seen it dip.
Yeah. Well, the next couple weeks are going to give us Fed, maybe Brexit outcome, definitely a jobs number. We'll have to find out. Ian, Mark, thanks, guys.
Yes, thank you.
Good to be with you.
When we come back, some big retailers hitting record highs last week, but it's been kind of a tale of two markets. Should investors still fear an upcoming retail wreck? We'll hear from former Toys R Us CEO Jerry Storch. That's next when Squawk on the Street comes back.
I look at this piece and I say to myself, there is going to be, there's like a mall Armageddon going to happen.
If stiff pants are a problem, fix it with Duluth Flex pants. Only at Duluth Trading.
Let's go get lost so we can be found. We're on our way. Let's go get lost.
If you're on Medicare, remember, the annual enrollment period is here. The time to choose your Medicare coverage begins October 15th and ends December 7th. So call United Healthcare and take advantage of a wide range of plans with a variety of benefits, including an AARP Medicare Advantage plan from United Healthcare. It can combine Medicare Parts A and B, which is your hospital and doctor coverage, with Part D prescription drug coverage and more, all in one simple plan. For a low monthly premium, or in some areas, no plan premium at all. Take advantage of primary care doctor visits, preventive dental care, and an eye exam, all for a $0 copay. Plus, earn rewards for completing other preventive care activities, like flu shots and annual physicals. You could also get over $150 in free health and wellness products. So now's the time to look at United Healthcare's variety of plans, and let us help find the one that works best for you. Also ask about our PPO plans that let you see any doctor who accepts Medicare without a referral, and take advantage of in-network costs, at home or traveling, when you see doctors in the United Healthcare Medicare National Network. With many of our Medicare Advantage plans, you'll have $0 copays on the most common prescriptions. In fact, last year, our Medicare Advantage plan members saved an average of over $6,500. And with Renew Active, enjoy a free gym membership and up to $115 in rewards for staying active. You can count on our guidance and support to help you get the most out of your plan. We can also help you schedule appointments or find a specialist. Annual enrollment ends December 7th. Start taking advantage of all the benefits of the only Medicare Advantage plans with the AARP name. We make it easy to enroll too. So call United Healthcare or go online today.
We do the research, you reap the rewards. Head on over to cnbc.com/select.
Universal Studios Halloween Horror Nights featuring Jordan Peele's Us and more.
Time now for ETF Spotlight. We're taking a look at the retail sector. The ticker there is the XRT. It's up over 5% this year. Target, Dollar Tree, Ross Stores, TJX, all trading near all-time highs, at least on Friday. So one question, of course, is can the momentum for some of those names continue? Joining us now to discuss, Storch Advisor CEO and former Toys R Us Chairman and CEO Gerald Storch. Gerald, always good to have you, even if you're not here on set. Before we get to broader retail, I just love your take this morning because you used to run Hudson Bay. I'm sure you've seen it, the special committee, they've agreed to a deal to go private. Does that make sense to you?
Well, look, Hudson Bay runs department stores principally. And if you take a look at even the most recent data from September retail sales, you saw department stores as a group were down 6% year over year in sales. It's a big decline. And if you look at the unadjusted data, they're down 7%. So it's a very difficult sector right now. Customers are moving away from department stores. And I think a lot of people believe, I know the Nordstrom family believes the same thing, that if you can take some of these companies private, they have a chance to shape the future and make the investments you need without so much concern over quarterly results.
Do you believe that? Do you think, that that's a real possibility? I mean, you're obviously taking on more debt when you go private as well, which increases your pressure to a certain extent. Are there really things, Jerry, you can do in the private markets with these retailers that are facing such significant issues that you can't do publicly?
Look, department stores are a difficult space. I think luxury is a little better because you have more exclusivity in the products. But department stores and apparel in general are quite troubled right now. Having said that, I've run private companies, I've run public companies, and I can tell you can have a longer time horizon when you're running a private company. You don't have to worry quite as much about what they're going to think at the next earnings call.
What do you think make the likes then of a Macy's, for example, which has been in the current dialogue, not the momentum way that we were just talking about when I introduced you, but obviously concern about their place in the mall and the continued concerns overall about mall traffic. I mean, is that something as well that, tell me what?
I don't care how good you are. And I think Macy's is a fine management team. I think Nordstrom is a fine management team. Of course, I think Hudson Bay is a fine management team. But I don't care how good you are right now. Department stores in a very tough place. Customers are moving away from the mall onto the internet. They're moving to discount chains. Retail sales are very strong. I know there was a lot of hand-wringing when the results came out last week for September sales, looking at month-to-month adjusted numbers and saying they were down 0.3%. But I don't pay a lot of attention to month-to-month numbers because they bounce around all over the place. In fact, they upgraded the August numbers by 0.2%. I look at the year-over-year numbers. And when you look at year-over-year retail sales, actually September is one of the strongest months we've had in a long time. It was up over 4%. And if you look at unadjusted numbers, it was a similar up 4%. And that's what retailers report. Unadjusted year-over-year numbers, that's comp store sales, which is the strongest sign of health in the economy. But having said that, there are winners and losers. You're going to see great numbers out of the discount chains. Walmart, Target, Costco, off-price players, TJ Maxx, Home Depot again, Dollar General, the value players. And look at the e-commerce numbers. They were up 12.9% adjusted year-over-year for September. If you look at the unadjusted number again, which is really real dollars, they were 15.7% month over month. So if anything, all the trends we've talked about are just accelerating. The internet is growing faster than ever. The value players are doing great. Department stores and mall-based apparel are in a load of trouble.
Jerry, I want to get your thoughts. I mean, we do have these looming proposed December tariffs that are still set to go into place, and there are tariffs and potential rate increases that could still happen before the year is out. I wonder what you think it means in terms of inventory. Are we seeing or are we going to see a pull forward in inventory by the retailers? And I ask that because it could have big implications, not just for the companies themselves, but also for the macroeconomic data.
Yeah, I think there might be a little bit of that. I think most retailers are smarter than that, and they buy the trend. You always have to. And I do believe, no one can say tariffs are a good thing, but I do believe, and I've said this before, that the impact of these tariffs is somewhat overstated. When you take a look, retail prices actually are showing no inflation at all to speak of, right? Producer prices are showing no inflation at all to speak of. And I do believe when you take a look at the amount of goods subject to these tariffs, it's about 3% of consumer spending. And when you take, 10 or 15% or 3%, it really disappears in the overall consumer economy. There may be individual companies very highly affected by this, and they're going to do everything they can to mitigate it. They're going to negotiate with their suppliers. They're going to bring some goods forward, but they're not going to, I can't believe they'd be that stupid as to bring in, inventory that's going to turn bad fast. That's the biggest mistake a retailer can make. So I hope they don't do too much of that. But they're going to do everything they can think about, whatever they can do to mitigate this. But I don't believe this is the giant macro factor you keep hearing about. The uncertainty, that's a big factor, by the way, which the people don't know where it's going. But what's been done so far, it really becomes a rounding error when you look at the numbers.
Yeah. Gerald, always good to have you. Get your insights. Look forward to catching up again soon. Thank you.
My pleasure.
When we return, shares of Boeing continuing their slide as the MAX crisis deepens, down about 4% right now. So where should Boeing's management go from here? We'll discuss next when Squawk on the Street returns.
ETF Spotlight is sponsored by Invesco QQQ, a wide array of innovative investments in one ETF.
can't just inherit 4,000 acres.
Dad, I'm not saying...
The taxes. Amanda, you'd get killed on the taxes.
I was going to say, there's a way I can buy the business. We set up a trust, and that's how we transfer the stock.
But the estate taxes.
There are no estate taxes. And you keep getting paid, same as before.
Let's run this by BDO.
It was their idea.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
You're 169 in the queue.
I proposed on the 169. She got off for the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. U.S. troops crossed into Iraq early today, part of the withdrawal from northeast Syria ordered by President Trump. More than 100 vehicles crossed the border where Turkey has agreed to pause its offensive for 5 days under a deal with the U.S., but that truce expires late tomorrow. Defense Secretary Mark Esper says U.S. troops will stay near Syria's eastern oil fields during the U.S. pullout, which will take weeks. He spoke at a news conference in Afghanistan.
This withdrawal will take weeks, not days. Until that time, our forces will remain in the towns that are located near the oil fields. The purpose of those forces, working with the SDF, is to deny access to those oil fields by ISIS.
Afghan's President Ashraf Ghani met yesterday with House Speaker Nancy Pelosi and a group of American lawmakers who were on an unannounced visit to that country. Pelosi says her visit touched on security, governance, and economic development. You are up to date. That's the news update this hour. Morgan, back downtown to you.
Sue, thank you. Management in crises. Boeing and Johnson & Johnson resuming their slides after scandals shook both of those companies last week. Joining us now is Jeff Sonnenfeld, Yale Senior Associate Dean for Leadership Studies, and Bill George, Harvard Senior Fellow and former Chairman and CEO of Medtronic. Good morning to you both. Jeff, I'll start with you. From a management and leadership standpoint, Dennis Muhlenberg, CEO, stripped of his chairmanship last week. But in general, when you look at the steps the board is taking, has it been enough?
Yeah, I think the board has done the right thing. There's no time to celebrate with 350 fiery deaths of innocent civilians. It's a horrible situation. I think the public was looking for perhaps more public commentary, but the leadership was held back pending the safety review by these international authorities. They weren't allowed to speak out beforehand, and of course, there's this Department of Justice investigation taking place, which they couldn't comment on in terms of this odd communication from a test pilot that came out on Friday certainly threw quite a wrench into markets.
Yeah, and Bill, I mean, we had the survey that was released from a couple years ago as well, showing that there seems to have been a push, or at least a third of employees that were surveyed seem to have felt pushed to produce and maybe potentially put some of those safety steps into question. I'm going to put the same question to you. Do you think the board is doing enough?
I think they have stepped up in recent months, and I think what's most important is this safety committee that Admiral Giambastiani is going to chair. They have an outstanding board. This is where a board has to step up. I faced similar things in my career at Goldman, and we did with the Medtronic board. So the board has to step up. But I think the most important thing now is ensuring the safety of Boeing aircraft. And that's going to require a complete top-to-bottom review by the management, overseen by the board, very similar to what we've done at other companies, and getting the MAX approved for flying, working with the FAA to get it approved for flying. Until that happens, there's going to be lots of questions coming up. By the way, there's always pressure in companies, but it can never sacrifice safety or quality. At Medtronic, there's pressure to make them to do a good job, to serve patients, but you can never sacrifice it. So it's the same thing here. Boeing has to be known as producing the safest aircraft made ever, and they have to do that, and that's going to require a top-to-bottom review of all their procedures and make sure that they're right.
Bill, Jeffrey, a board's role, certainly one of the most important ones, is also to be ready to potentially have a successor and think about whether or not the tenure of the current CEO is deserving of continuation. Shouldn't the board at least be considering that here? Shouldn't they be delving into exactly who is responsible for what certainly has been one of the worst missteps this company has ever seen?
It's absolutely one of the most unfortunate periods in the history of the company. But there have been periods in the history of the company where there was actual misconduct. In Richard Sears's day and Phil Condit's day, that's not what's happening in this case. There's no evidence that surfaced of any deceit or any misconduct. But certainly it's not a happy moment. I hate to agree with Bill George, my Harvard friend, but he happens to be right again on this one. The board has done the right thing to put together a safety committee, but also to centralize engineering as they did, instead of being diluted out through the company.
But Jeff, doesn't somebody have to take responsibility? It may not be misconduct, but it's a screw-up of pretty significant proportions.
Well, you've got 900 vendors, and there is something that Rockwell Collins did that was not transparent to anybody. I don't think he holds somebody responsible inside Boeing for them having combined some indicators where one of those indicators would have been on the instrument panel. The other one would never have been unless you're military aircraft. They didn't know that was combined, and that wasn't put on, and that still wouldn't have prevented this disaster. But there were some little things like that. And also they've learned a lot just about the MCAS system, what they didn't anticipate, frankly. And this will be controversial to say because it's not blaming the victim, but we have a lot of newer, younger pilots, 23-year-old pilots with 26-year-old captains, because of a pilot shortage around the world. Is something they haven't anticipated. So with all the buzzing and alarms going off, they have to anticipate that this MCAS system, which is the autopilot system, that it reverts every 7 seconds, is now not going to take control away from the pilot as frequently. So the software fixes make good sense, and I also think separating the roles makes sense. In an unhappy period in the building we're in right now, they had a separation of roles, as you remember at one point, and they had to regain confidence that way. David Calhoun as a chairman, and by the way, I think Bill George and I agree, and maybe you agree, it's not a panacea, separation of roles, but in some cases, at a time of crisis, it's somebody who can focus on the regulatory issues. We've seen it done well at Citigroup. We've seen it well done at Raytheon. You separate the roles so the chairman can deal with regulatory issues and the CEO can run the company. I think that's been pretty effective.
Bill, just shifting gears here, because the other company that is continuing to be under pressure right now because of its own issues is Johnson & Johnson. You had these tiny trace amounts of asbestos found in baby powder, one sample, I realize. But after years of the company coming out and citing studies and saying asbestos is nowhere to be found near its baby powder, how do you think that company now needs to respond? And what's the brand impact? Because that seems like the biggest potential longer-term issue here.
Yeah, J&J's being hit by a whole series of plaintiffs' attorney suits, and they're coming after him. I don't think there's any causality that's been demonstrated between these problems, but certainly this is an embarrassing moment, and any trace indications asbestos have caused a great concern. It was one lot, 33,000 bottles have been recalled, but they have to make absolutely certain that their production process is 100% pure. I don't think that indicates everything else in baby powder is unsafe, although it's a whole different situation. They've just made a major settlement in the opioids. I think everyone in opioids now is getting hit and kind of forced to a settlement situation. But they're being hit from all sides, and I think it's a very serious situation. Again, the board's got to step up, work with Alex Gorski to get these plaintiff suits settled and behind them. And the question here, it's the same at Boeing. You're challenging the integrity of Boeing, of J&J science. And Boeing has got to stand behind that and say, we are going to ensure that our science is perfect. Just like you're challenging the integrity of Boeing's safety commitment. I think both companies are committed to the highest values of integrity and safety.
Well, you know, it's the legendary CEO, as I knew you knew, Bill, is of Johnson & Johnson, had once said that trust, not even the science at Johnson & Johnson, that trust was their institutional trust most valuable asset. Both companies, I think, treasure that, and they're working very hard to restore it. But once you separate the fingers, it's forever gone. They're keeping those fingers together like a precious liquid. So I think they're doing a great job. Alex Corsi, they surfaced it and brought it to the attention of regulators and at Johnson & Johnson, and they've been really thorough. And on the opiate side, I mean, they obviously were only dealing with prescription drugs.
All right, gentlemen.
By the way,
well, thank you for breaking down both of these companies for us today as these stories continue to develop. We appreciate it in this Yale versus Harvard segment.
No, not versus.
Not really.
All right. Well, speaking of opioids, 4 drug companies did reach last-minute settlements to avoid what would have been the nation's first federal trial dealing with this opioid crisis. Our Meg Terrell is in Cleveland. She was expecting the trial to start this morning. Instead, she has news of the settlement for us. Meg.
Hey, David, we'll talk about an 11th hour reprieve. In just the minutes before this was scheduled to start this morning, we got news that a settlement had been reached just to avoid this first trial in the federal opioid litigation. It doesn't take care of the thousands of cases that are out there. But the 3 major drug distributors, AmerisourceBergen, McKesson, and Cardinal Health, have reached a settlement to pay $215 million in cash to these 2 Ohio counties that were the plaintiffs in this trial. Additionally, Teva, which was the sole drug maker left as a defendant in this trial, has agreed to pay $20 million in increments of $5 million over the next 18 or so months. Additionally, Teva is going to be contributing some